Hi everyone, it's Nancy Godrat. I'm following with the exercise we started, the problem we started with ABCing for adjusting entries. And this is the last part of the adjusting entries for this company. The number 7 says services performed but not recorded at March 31st are 800. So, which means we need to increase our service revenue because we've done the services. And if you remember, I told you that adjusting entries never affect cash. Therefore, client hasn't paid us any money. We're going to debit the client's accounts receivable for the 800, and we're going to credit service revenue for 800. And then we're going to post it to the general ledger. Before I do the posting, show the posting to you, I also wanted to show you that the two entries, the adjusting entries we did for supplies and unearned service revenue, the facts can be given to you in two ways. The first way would be for supplies would be they would tell you what is supplies on hand, and therefore you have to go find what was the supplies to begin with minus supplies on hand to arrive the amount used. Or they could just tell you the supply used was, in this case, 1400. So either you have a subtraction to do or the amount is given to you that you don't have to do anything. You just take the amount for your adjusting entry. For service related to unearned service revenue, there's also two ways of showing the same facts. We worked on the services related to unearned service revenue worth $1,000 were performed, and therefore our adjusting entry was increasing service revenue, decreasing the liability unearned service revenue. So we debited unearned service revenue for 1,000, credited service revenue for 1,000. Now, the wording as part of the fact could have been this way too. Instead of the first sentence, they could have told you that as of March 31st, 500 of unearned revenue still remains unearned. So that means the rest of it we must have earned. So if the unearned revenue in our books is 1,500 right now, unadjusted balance, and it should be only 500, therefore 1,500 minus 500, the rest of it, the $1,000, we must have earned. So the $1,000 becomes your adjusting entry. Unearned service revenue 1,000, service revenue 1,000. So the same facts can be given, the same adjusting entry amount can be given in two different verbiage, so you could come up with the same adjusting entry. Now, after you prepare your adjusting entries and post it to your general ledger account, I already have posted all my adjusting entries that I've shown you with yellow in here, so you would know those are the adjusting entries and not daily entries. And then I came up with the balance, which I show as a balance as of March 31st. The red numbers are adjusted balances. The next step in our accounting cycle is to prepare an adjusted trial balance. Now, what is an adjusted trial balance? An adjusted trial balance is a report that we prepare just for internal use to see if all the accounts that we debited during the during January, February, and March, would they equal all the accounts that were credited? So where do we get the data? We go to the general ledger and we start with the first account, cash, and bring over its balance. Then we go to supplies, bring over its balance, prepaid insurance, bring over its balance. So that's why you see cash, supplies, prepaid insurance with the balances. And even though cash or equipment or notes payable items that I bolded, they did not get adjusted at all during our adjusting entry process, you still need to show them in adjusted trial balance. Otherwise, when you go to prepare your financial statements, you don't have all the information, because we use the adjusted trial balance report to prepare our financial statements. So now at the bottom of your adjusted trial balance, you have lots of new expenses that you didn't have before, such as supplies expense, insurance expense, depreciation expense, interest expense. We didn't have these during January, February, and March. Why? Because we never prepared financial statements until March 31st, and that's when we showed all our expenses for the item that we used. You use supplies or the insurance policy expires every day, but we don't prepare an adjusting entry on a daily basis. That takes a lot of effort and it's not worth it. So we wait until it's time to prepare financial statement. Now, when you prepare financial statement, the first financial statement we prepare is income statement, which shows all the revenue and expenses. So if we look at the bottom portion of adjusted trial balance, the revenue and expenses are listed here. So now we're going to just move it to a report format, name of company, name of the statement, and what period of time these numbers are covering. This is for the quarter ended March 31st, and the numbers are coming from your adjusted trial balance. So they had only one source of revenue, service revenue, all the expenses not adjusted. We add them together, and the difference between total revenue and total expenses is the net income in this case, because our revenues are higher. Now, the next financial statement we prepare is your retained earnings statement. For the retained earnings statement, we need dividends coming from your adjusted trial balance. And if the company has been in existence before this period of financial statement preparation, you will have a beginning retained earnings, which sits on adjusted trial balance. This company doesn't have a beginning retained earnings at March 31st because January was the first day of operation, and March 31st is the first day we're going to prepare their financial statement. So when we prepare the statement, retained earnings statement, again, you're going to have a heading that says the name of the company, the name of the statement, in this case, retained earnings statement, or a statement of retained earnings. Both is correct, and it covers quarter ended March 31st. So let's write down, for anybody who wants to use our financial statement, that our beginning retained earnings or retained earnings as of January 1st, retained earnings January 1st, 2016 is 0. Normally you don't write 0 in your financial statements, meaning that if an account has a 0 balance, you don't need to write it. However, in here I'm writing it to tell financial statement users this is the first time we preparing financial statement. We're going to add the net income to that beginning retained earnings, because retained earnings definition is accumulation of net income or net loss of the company from the first day that is started doing business, and now we're going to reduce it by dividends that we brought from adjusted trial balance, the $600, and therefore the ending retained earning statement, or basically retained earning statement at the end of March 31st is $21,500. $21,550. Now, the next statement we prepare is balance sheet. Balance sheet, when you go to adjusted trial balance, all your assets are here and the contra asset. So we need to show assets and contra assets in one section of your balance sheet, then followed by, so the items in blue in here are your assets and contra assets. So then you need to show your liabilities, which are notes payable, accounts payable, unearned service revenue. So let's show those in a different color. How about orange? And then, there is an also interest payable that I didn't, and wages payable, I didn't pick up those. So those are your liabilities. Then you're going to show in your balance sheet the amount of common stock that will show up in the balance sheet under the stockholders' equity section, and also your retained earning balance as of March 31st will show up in your balance sheet. So assets comes first in your balance sheet, and you have to list them one by one. Then comes your liabilities, and you have to list them one by one. And then comes your common stock and retained earning account. And retained earnings, the number doesn't come from adjusted trial balance. The number comes from your retained earnings statement. Everything else for your assets, such as cash, such as accounts receivable, such as supplies, I'm not going to go over all of them because I'm not going to have time to finish this, but I will put the solution up for you on Canvas. It's going to show up in the asset section and the contra asset. The liabilities going to show up in the liability section. Now, the heading for your balance sheet is the name of the company again. In our case, it was ABC Inc. and the name of the statement, and in this case, balance sheet. Now, the other statements always shows you a beginning and ending period, like for the quarter, which starts on January 1st, ends on March 31st. Balance sheet will show you only a snapshot of the company's assets, liabilities, and stockholders' equity. So it's always the end of the month that you have as the date for your balance sheet. The same way we have the end of the month date for our trial balance. Guys, remember, balance in your financial statements, you don't have a debit credit column. The column to the left shows the detail for the column to the right. Okay, this is your chapter 3. If you have any questions, please send me an email. Thank you. Talk to you soon.